Hey, welcome back, everyone. How are you all doing today? I hope you're all doing amazing. I hope your week was eventful, and I want to believe we're all doing very well. Okay, now let's get straight into the market. But before we do that, if this is your first time watching the video, if this is your first time on this channel, I want you to do me a favor and subscribe to the channel. If this is not your first time, please don't forget to like the video. It's not gonna take anything away from you. I just want to support the channel. All right. So before we jump into the fundamentals and talk about few important things, let's start with the dollar. We're gonna start with technicals today. Although this coming week we have a lot to talk about economically, all right. However, I want us to start with the dollar index today. So let's get started. First off, we have what I would say a very sporadic week. Because last week, well, if you can remember what we discussed, the plan was the market was retesting this particular region right here, and that was 99.45, right? This particular region is a very significant region because this is what makes or mar the dollar momentum moving forward. Okay, so the plan was potentially we could see dollar retesting this region and move to the upside, or maybe come fully down to 97.40, okay, and potentially make another leg to the upside. However, anything that makes the dollar index on the technical perspective, all right, fall below 97.40, I was expecting it to drop all the way down to 95.55 or even lower to 94.65. Those were my forecast and those were my plan. However, what happened last week was we got the current geopolitical conflict in the Middle East. I'm talking about the Iran, US, and Israel war that is currently hot right now. Okay, and since then, couple of developments. Right, Donald Trump promised that he's gonna give the Navy, okay, a go ahead. He actually did. He told the Navy that okay, escort every tanker through the Strait of Hormuz that was closed by Iran because they are the one controlling that strait. Now, because of that, okay, we saw the US oil came down, dollar index also did what came down, right? However, since then, Monday, Tuesday, Wednesday, because I was following the event, we got intense pressure from Iran. They blew almost five that I can count. It might be more, okay, that I can count. It was up to about five tankers that tried to cross the Strait of Hormuz. And then reports now followed from Reuters, from CNN, that even the Navy are scared. Not we're not talking about the tankers now. The navies are scared to follow or take Donald Trump's offer in allowing the navy to escort them through the Strait of Hormuz. Okay, so that alone now give WTI strength. It gave Brent strength, and they continue to rally because that simply means that the Strait of Hormuz that controls almost 25%. Okay, it's between 20 to 25% of the global oil, shipment. Okay, it's been shut down. So now the place is not just being shut down; it's not very hot. Okay, again, that alone caused a lot of ruckus. Okay, now that aside, last week also we heard Donald Trump saying that yes, he has also been able to ship almost or over 100 million barrels of oil from Venezuela. Don't forget, Donald Trump now has, I mean, the United States literally now has Venezuela oil in their pocket. Okay, so that happened, and moving forward, the supply is there from the United States. So, and the United States being the major, the country in the world that has the biggest reserve of oil, East Asian country, some African country, most of the European country needs the US oil. Now, can this serve everybody? Of course not. That's why we have Iran, we have the Arab countries. I'm talking about Saudi Arabia, I'm talking about Kuwait, I'm talking about Iraq because there's oil deposit there as well. Okay, so you will see how this all come back to the dollar, right? So the demand for oil from all these Arab country, or let's say the Gulf country, is reducing because of the Strait of Hormuz that was shut down. So everybody have to fall back to the dollar, fall back to the United States, because now the United States seems to be the only country that has no problem refining oil, right, and distributing oil. They might not be able to distribute it to countries like, I'm talking about the Middle East countries, but Asia and few African countries can still be serviced by the United States of America. And then with the Venezuela oil in the pocket, okay, that is a very good one. So you can see the reason why dollar is now sporadically going higher, because there is a demand for oil. And when they're demanding for oil from the United States, they have to pay in dollars, right? So that is one of the reasons why we're getting hotter. I mean, we're getting this strength come back to the dollar. That's one part. The second part is inflation. So let's take a look at this United States economic heat map. So taking a look at this, I would say that we are still very much in a very tricky economy. The United States economy is not super strong, in my candid opinion. Is not super strong. I must say that. However, when you take a look at the and what do I mean by super strong? Let's start with the labor data. Okay, labor right here looks very skimmish. Okay, we have wage growth at negative 3.8%. That is awful, right? We have unemployment rate at 4.4%. It was slightly higher from previous, right? Even what was forecasted. So that simply means that the unemployment rate in the United States is also high, although 4.4% is more like the benchmark. Anything between 4% to 4.5% is the benchmark for unemployment rate. The moment you see it cross above 5%, 5.6%, anything above 4.8% is becoming very dangerous. Okay, so that said, initial jobless claim also is not looking good, because on the benchmark for a jobless claim should be around 150K to like maybe 100K. Okay, anything above that, the jobless claim is not looking good. Okay, so if it's staying below 150K, is fair, but when it crosses above 200K, that becomes very dangerous. Okay, so right here we can say the jobless claim. But I'm talking about the hard data, also not looking very good. Okay, JOLTS job opening looks fair, but we know JOLTS it's very tricky, especially when you have ADP and NFP that came quite low, right? ADP was 63K, and non-farm payroll came very terribly at negative 92K. So labor data is awful in the United States. I will give it average maybe 15%. Okay, I'll give you like 15%. It is not very good. Okay, 15%, and that's me even being generous. All right, 15% is not good at all. Now let's move to the economic size. We're talking about the economy, yeah, the economic size, the growth. Okay, now looking at the GDP, yeah, let's look at this. So looking at the GDP right here, you can see from 1.4%, as well as from 4.4%, the market was forecasting 1.4%. That is in and of itself low, but the actual was 0.7%. That means the growth in the United States is diminishing fast, extremely fast. 0.7% GDP, quarterly GDP is not good. And before we get a kind of data like this, is in like March, April, May, June, June and July. Before we can get something like this again, should be June and between June and July. So that means in the last 4 months, the GDP has dropped drastically. However, the manufacturing PMIs and the service PMI look super cool. All right, they look super cool. But another part of the economic growth that I didn't pick earlier, that was the retail sales. We're talking about the consumer confidence and retail sales. How much is actually how are the consumers in the United States buying stuff? Do they really have money to purchase things? Okay, how are they approaching the market? How are they buying things? Are they strong? Okay, you can see we have negative 0.3, negative 0.2. That means it is below average. Negative 0.2 is terrible. All this bullish reading is not going to call it for me. Okay, because when you focus on the actual data, it is not good. Okay, the actual data itself, not the difference between the forecast and the previous. Okay, I'm talking about the actuality of the data. I'm talking something like you can see these manufacturing PMIs above average, above 50 is super good. All right. So when we have retail sales at 0.2, negative 0.2, that's terrible. So retail sales, that means businesses, small scale businesses is dropping down. Okay, I'm very sure that consumer confidence will probably also be slowing down gradually. So that alone is also problematic for the dollar. So when you look at the data, when you break it down one by one, it is not looking super solid. And that is why all through last week and week before, I was calling for lower leg on the dollar, lower leg on the dollar, another bearish momentum, because technically it's bearish, right? On a daily 4 hour to the downside, it's bearish. And I mean, it's when the market is bearish, you just want to sell it, right? And fundamentally, when you take a look at that data as well, it doesn't look good. Or let's take a look at the inflationary data. We have the CPI, we have the PPI, and we have the PCE. I would actually argue that the United States is going through what I would term as stagflation right now, but inflation will soon catch up because of the fuel, I mean, because of the oil price. Okay, inflation will soon catch up. So the fear of inflation, everything right now is streaming bearish dollar, bearish dollar. But the demand for dollar itself, and by demand I mean the East Asian company or countries demanding for dollar so they can buy oil from dollar, probably from Russia as well. You understand? It is very, very massive. And that when the actual demand comes to the market, no matter what the ad data says, it's still going to be very impactful. And that is why we have this crazy rally on the dollar, in my personal opinion. Now we are here. What can we expect moving forward? What is the plan moving forward? So, on a technical perspective, I would argue that we're already approaching this particular resistance, okay, at 100 region. It's not even that we are approaching it, we're already there. Okay, so being here means some things will start playing out next week. Okay, so first off, let's break this down one by one. We have a resistance there. Okay, I will potentially gonna be reducing this and probably drag it a little bit to this particular region. I will put this one here, right? So we have 107 region, we have 104 region as well. Okay, we have 104 region, excuse me, 040, right? And I guess the plan now is basic. Okay, the moment dollar breaks decently above here, all right, the plan is to wait for a correction back to retesting this 100.35 region, and then we can start calling for higher leg on the dollar to the upside. Okay, in my personal opinion, based on technical perspective itself. Okay, so potentially we can see something like this. Okay, on the dollar, the alternate side of it is, which is still pretty much bullish. I would say that, let me actually use trading view tools. So first one is something like this. Okay, you can get something like this on the dollar, highly possible. All right, this is going to be my first trade plan on the dollar. So come next week, if dollar eventually break decently above this particular region, all right, then we can wait for maybe a zigzag to the upside to complete this 1, 2, 3, 3, 4, 5. Okay, something like that, because three we have 1, 2, 3, 4, 5. Okay, then correction, then we have 5. All right, so then we can wait for ABC correction back to 135. Then we can now start calling for higher numbers to the upside. That's my plan on dollar. That's the first plan. The second plan would be, potentially we can wait for dollar to in fact make a very fast corrective move to the downside like this, and then start going back to the upside. All right, that is another plan. Potentially we can say this, okay, dollar making a pullback to retest this particular region here, and then we can start calling for another rally to the upside. I hope you guys can see this very well. Okay, potentially dollar pullback, okay, to this region right here, this particular resistance, also resistance here. Now potentially I'm expecting it to use as support, and that's 99.50 region. Okay, if you use this place as support now, then we can wait for market actually going all the way to the upside. That is second plan for my bullish take. Now, anything that now makes the dollar to do what? To cross below this particular trend line, okay, make another upward move to retesting this particular region, I'll be expecting a drop on the dollar. Okay, I'll be expecting what? A drop on the dollar index. So we have three play. One here to the upside. The second one is right here, immediate pullback to retesting this 99.50 region, and then we start calling for rally to the upside. The other part, which is the opposite of those two potential buys, okay, that will be this particular short trade, and that is gonna fall below here. Okay, anything within this zone right here, I would be looking for a potential short. all the way down to 97.40, okay, which is this particular demand zone that we just left, okay, without retesting, okay. So potentially maybe the market is going to retest it and then maybe it's going to rally to the upside. But for now, I have this three plan on the dollar, but I am not 100% bearish anymore. I'm around 85 to 75% bearish on the dollar. Why? Because it has already broken a very decent region at this 99.40. I mean 50. So from there onward, I mean this could be a false breakout and dollar will just come down and drop further to the downside. That would be nice. But so far it stays above what? So far it stays above here, then I'll be calling for a further rally on the dollar index. So I hope you're all clear on that. That is how I'm positioned on the dollar for now. And that's why on our Discord channel, server, excuse me, I was very, very skeptical on calling some trades on the dollar index. Okay, there are so many trades we could have taken, but I was very cautious. That's why I left the trade call to just two USD card, okay, dollar card, and Kiwi dollar, all right, NZD, USD. Those are the two trades we took all through this month. Why? Because this is how dollar is playing since March. Dollar has been here to here. That this is the whole play for dollar in the month of March so far. So when you have this, you don't want to be selling dollar and you don't want to be buying Kiwi dollar. And the trade setup I could see was to short dollar card and long Kiwi dollar. And when you have a strong dollar like this, you want to be very careful. Okay, so when we get to those two pairs, I'm going to explain the thought process behind them. We were able to trade out of, we took some profit on dollar card, but Kiwi dollar closed out in a loss, straight loss. But we have CAD JPY that is still making good money. All right, and then Brent and WTI are also looking good. So those are also very good. But before I jump straight into the chart fully and start talking about the technical analysis and all, as usual, we have to talk about fundamentals the first few minutes so we can cover a lot of ground. And I think we've done like 75% of it already. But what I just want us to discuss is the coming data this month. I mean, this week we have a lot. This week is like the central bank week. Okay, we have the rate decision from Canada from Australia on Tuesday, right? From Australia on Tuesday. We have from the United States on Wednesday. You can see the Fed fund rate right here. Also, we have from Canada as well, Bank of Canada rate statement, overnight rate, and then their press conference. The same thing right here in Australia on Tuesday. Okay, cash rate and everything like that. On Thursday, we have Bank of Japan policy rate, the press conference, monetary policy statement, and everything like that. On Thursday as well, we have Swiss National Bank rate statement, policy assessment, and the press conference as well. And then the same Thursday, we have in the United Kingdom, okay, Bank of England, monetary policy summary, MPC official bank rate votes, and official bank rate itself. Okay, but when you take a look at this in Australia, we are expecting a rate hike by 25 basis points. I think that's already been factored and priced to the market. That's how we saw that Aussie is one of the currency. They were very, very, very sporadic last week and upper week. It was just flashing to the upside. It was very crazy. All right. On Wednesday, in Canada, they are leaving their rate unchanged. The United States Federal Reserve also leaving their rate unchanged. Bank of Japan also leaving their rate unchanged. I think the Bank of England as well leaving their rate unchanged. So for now, it's only Australia or Reserve Bank of Australia that plan to hike rate by 25 basis point. All right. So on Friday, I mean, there's nothing on Friday, but on Thursday again, we also have we have the ECB, okay, European Central Bank. Also, they are dropping their interest rate, main refinancing rate, monetary policy statement, and ECB press conference, and they're also leaving it unchanged. So it's decent, but at the same time, it's pretty tricky. So you might want to watch out. The only central bank that plan to hike rate or do make any significant change is Australia, and they're already, I mean, that has already been priced in. The market already made the run. So, but we should get some updates moving forward as usual. So you don't want to sleep on that moving forward. So let's take a look at the Edge Finder top setup. We have AUDCHF, which is very bullish. AUDNZD also very bullish. I'm not sure I'll be taking these two buys. I don't really like them. Aussie yen, I have my eyes on it. Dollar yen, on the other hand, I want to short it, but I would calm down and probably buy later, right? Bitcoin, I'm currently holding a buy on Bitcoin. I don't even know how it's going right there. Where's Bitcoin again? When we get there, we're going to check it out. Right. Okay, Bitcoin's. on the average is like in the middle. So I'm currently holding a buy on Bitcoin. I actually joined later because I was already shorting earlier. Then I took a buy. It was a roller coaster. US oil, I'm buying dollar. I'm buying US oil. Catch CHF, I would not be buying this. I rather wait for a short. Pound Aussie, Euro Aussie. I have a counter trend buy on these two if they are very bearish. I'm not gonna advise anybody to take a trade, but I'm gonna share it with you. It was a weekly trade and they're very cool. All right, if they play out, it's gonna be a very good return. Euro dollar, yeah, bearish, maybe. We're gonna look into it together. Kiwi dollar, this drop last week was crazy. So I don't see anything wrong in selling Kiwi dollar for now, especially if you're an intraday trader. Yeah, you can link into that. Pound dollar bearish as well. It's very tricky again, but we're gonna talk about that as well moving forward. But it's very bearish. It's called -9. So we see how that goes. So that's those are the top setup we have right here. I think everything kind of like makes sense in my personal opinion. And let's see how they all play out this coming week. Okay. So without further ado, guys, let's jump straight into the full details of the technical analysis and the shebang, like we always do every other week. So we're going to be starting with the card yen. And right on Cardian, I'm currently trailing at 115.80 and I have it shared on our Discord server. Okay, this trade has actually made a very good run, right? It's currently running at 1.226. Okay, 1.26. But I don't want to close it yet. I'd rather just let it take me out at maybe 1.23 or something like that at that region. But for now, it looks good to hold. So I'm going to be holding it. Dollar card, I was able to trail dollar card out because it made lower low, right? We have lower low, lower high, lower low. So I was able to trail my stop to like a little bit below break even. So I got taken out right here on Friday, and it was a painful one, but I think it's a pain that is necessary. Why? Because of the dollar drama right now. So for now, I'm still gonna hold on to this. Okay, I'm gonna watch very patiently, and when I get another entry, I'll still be considering shorting dollar card because on the weekly band, I think we have a better chance of seeing dollar card below at this 1.3268 in the coming days. All right, potentially we can see dollar card first at 1.3410 and potentially drop to the downside to 1.3268. So those are the regions I'll be looking to short dollar card to. You can see on the weekly time frame we have lower low, lower high, lower low, lower high, lower low. Then we have ABC correction on the weekly band. Since then we have lower low, lower high. We have lower low, lower high. So potentially we can see another leg right here, lower low, then corrective wave, lower high, followed by another wave to the downside to form a new lower low. And from there we can now see another what? Another ABC to the upside like this, followed by another round of lower low, lower high, and then the rest is shebangs. Okay, you know how it goes. So for now on dollar card, I will be looking to short it. And if you take a look at it on the weekly, it's in a very big fat range. Okay. And when it's in a range, you can see it has already retested this particular resistance region multiple times. I'm talking about 2013 resistance right here. This is 2013, or let's say 2014. Okay, like 2014, so to speak. We have 2019 here, and then right here we have 2025. Okay, 2025. So this is 2025 stroke 26, don't forget. This is 2019 stroke 20, don't forget. And this is 2014 stroke 15, don't forget. Okay, so right here, this is the resistance that has been retested. And you can see multiple times also 2014 stroke 2015 support, 2017 stroke 2018 support, and right here we have 2020 stroke 2020 actually support. So potentially by 2027, 2028, we should be able to get this particular resistance retested also. Okay, I think the whole move to the downside takes like 2 years, okay, and the move to the upside takes much longer time. So potentially we could see this particular asset actually drop down faster. Okay, even if you go back in time, you can see the corrective wave is always very small. Okay, you can see the corrective is always it's randomly very small, but when it's dropping, it drops fast, it drops fast, it drops fast. Also, right here, it drops fast. So that's another thing you want to really understand when it comes to forex trading. Okay, you want to understand the psychology behind each pair. All right. So that said, I will still be calling for another leg to the downside on dollar card. But how I'm gonna take the trade, I'm not sure yet. But when the time is right, you'll be the first to know. Kiwi dollar, I couldn't trail Kiwi dollar, and I think some of you might have known the reason. Even though the trade actually closed around 1.34 profit, okay, we had 1.34, profit, but I could not trail it. Why? Because the only thing I was able to get is a range. Okay, there is no higher high, higher low structure. That's why I couldn't trail it. All right, very painful. Even though I know that there is high possibility that dollar index will actually go to the upside, considering what I've explained earlier, right? Still, I could not trail it because the rule is the rule. I trail every higher lows when I'm buying, and when I'm selling, I trade every lower highs when I'm selling. Okay, so that is the what that is the rule. So it's as painful as it is, it's still a very good trade in my opinion because I got everything I've always wanted before taking the trade. So now, the potential of Kiwi dollar would be back to this particular region, this particular demand zone at 0.5771 thereabout, something around here. Okay, so let me bring the coordinates. Okay, yeah, 0.5713. Okay, this particular region here. So that's where I would potentially be gearing up for a decent buy on Kiwi dollar. As it stands now, I'm definitely not going to be rushing it. Okay, so that region there would give me a better risk to reward ratio, and I'll be watching for a very good buy moving forward on Kiwi dollar. I want to drop. That's why I said there's that potential that we can short it if you're an intraday trader. You can wait for corrective wave, okay, something like ABC or maybe kind of WXY kind of momentum. If I'm talking about ABC, X, and then we have W right here. Okay, something like this, and then we have another A, B, C, and then we have our Y here. Okay, if you can get something like this, you can short Kiwi dollar back to the zone, and from there we'll be looking for buy opportunity. So that is how I'm positioned on Kiwi dollar right now. So let's watch out very closely on Kiwi dollar. I told you I'm buying WTI, so here it goes. As far as the BTI is concerned, I'm very bullish on it. I took a buy here. The majority of you know about it because I shared it like a month or 2 months ago, and it was a very good one. I was actually very pained because I closed this very early before this whole move happened to the upside. That was around, I think, 4,000 to I think 7,000 pips, okay, on WTI alone. So that in and of itself is very important to note. Okay, and moving forward, I will be calling for another leg higher on the dollar, on WTI. Okay, so but if you want to join, you can wait for market to come back towards this particular order blocks right here, this one here. So you can wait for it to come down to this region and then you look for buy opportunity moving forward. So those are my take on WTI. Looks good, looks decent, but I will not advise you to rush into it yet. So watch out very closely. The dollar yen, dollar yen, dollar yen. I want to short it, but it's not giving any good vibe. Okay, this one. However, I have a divergence here that I kind of like on the 12-hour time frame. Okay, so I have that particular divergence there that I kind of like. I'm very much interested in. So we shall see. Okay, we shall see how the lion wants to play the game. Is it going to continue to the upside, right? Or it's going to break below this particular trend line, pull back, and then drop back down. Okay, maybe, maybe, maybe. Okay, nothing is certain yet, but you can rest assured that I'll be there watching and waiting. Dollar Swiss. For now, dollar Swiss is not completely bad. Okay, I will be waiting for potential retest of 0.786 right here, this particular supply zone. If the market can come back to this particular supply zone right there, I would in fact be waiting for a potential short from there all the way to the downside. Okay, as far as dollar Swiss is concerned, I'm more comfortable shorting dollar Swiss than buying it, honestly, because it just makes a better sense selling dollar Swiss than buying it. So I will just watch out very closely on dollar Swiss. Okay. So the plan is still pretty much simple. Wait for the market to come all the way back to 78.6% Fibonacci retracement, and also which kind of like fall right inside this demand zone, the supply zone. Excuse me. Then we can look for a further short on dollar Swiss. So watch out very closely. Bitcoin, I took a buy on Bitcoin. Like I said, it's a very late entry. My early entry should be somewhere around here. So it was a much late entry. Why? Because I was already shorting Bitcoin around here before it stopped working. And that's more like it. Okay. That's more like it. So this is the trade. And that's it. Okay. That is it. So that's the short trade. That's what I meant. But now I'm looking for buy, and for now, let's say we can get Bitcoin all the way back to 75K or even higher to 79 to 80,000. That region will be where I'll be looking for a very swing short trade. Okay, a very swing short trade all the way down to 55K or lower. Okay, all the way what to 55K or lower. That is my plan on what's it called again on Bitcoin. Okay, pound yen, pound yen, pound yen. I took a buy on pound yen, very dramatic, quite annoying as well. But as you can see, I'm gonna be adjusting my trading stop once the market open. I couldn't adjust last week, but I'll probably be placing my stop loss around this region because as you can see, the market is already dropping down fast. And I don't want to get caught up in this drama. So I'll be preparing myself for a trailing stop around here. If I get taken out, I will resume again right after a descent. Demand zone has been retested and we get some order blocks and stuff like that. Then I'll be looking for buy on what on pound yen. For anything that makes it cross below 206 right at the bottom here, then I'm done trying to buy. I will always be then moving forward, I will only be looking for buy. I mean short opportunity on dollar yen. So watch out. As far as gold is concerned, on the signal page, I was calling for a bearish silver, but even gold, let's go to the 4-hour time frame. As far as gold is concerned, right here you can see that it is retesting this particular demand zone at 50.20, 50.20. Okay, it's currently retesting 50.20 demand zone. So by next week, I would also be waiting for maybe another leg to the downside. Okay, back to this demand zone. Don't forget, this particular demand is not even demand again, it's more like a support zone now. Okay, because it's been retested one, two, three times. But this particular demand zone has never been mitigated before. So there's a high possibility that gold will likely go down, mitigate this demand zone, and then fly to the upside from there. Maybe at 3K, I mean 6K or higher from there. But for now, we are still pretty much stuck at 50.20. And we know by next week, once the Asian market open, it could gap up, but I will not be tricked into that gap up. Okay, I'll wait for this particular demand, and that will be where I'll be looking for my buy on gold. Okay, I hope you understand that. Moving forward, my eye is already gluing together. I need a very good sleep, so I'll manage. I'm just pushing through right now. So chill with me. Silver, 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 silver. This is the trade I shared on the signal. I mean on this on our Discord server last week, and I said I'm calling for another leg to the downside. We have here, we have one ABC corrective wave. We have this particular move to the downside, which was actually very significant. And since then, we have what we can call a triangle to form our B. Okay, so we have this right here. Okay, so we can call this our B. So we have A, okay, and then we have B right here, and then we have our C all the way at the top here. So I can say right here we have something like a normal flat, okay, call it maybe I would say a running flat kind of pattern. Okay, we have a run, this is our C right here. So we have ABC, okay, corrective wave is already over at the top here, and now we're getting another move to the downside. So we have 1 2, okay, maybe we're going to get 3, and then 4 5 all the way down to 71.88 region. I'm actually pegging it at, I will also be very generous with silver. Okay, I'm very generous with silver. I would say something around 74 to 70 region. That region is where I'll be looking for buy opportunity on silver moving forward. Okay, and that could also lead to a further, and it can drop lower. Okay, it can in fact drop lower. And even on Edge Finder, okay, where is that Edge Finder again? Right here. Good. I think I got it. So right here on Edge Finder, you can see that right here we have gold and silver bearish, which is called what -6 economically. Okay, when you take a look, when you look at when you measure the economic score, you can see gold is bearish and silver is also bearish. Okay, both of them are -6. The same thing with echo score on the forex asset. Right here we have euro dollar with -5 bearish and pound dollar with -7 bearish. So that alone signals a whole lot of bearishness on all these assets. And that is another reason why I am calling for this particular leg on silver, so we can wait for a further rally to the upside, peradventure, or probably, or maybe it's just gonna drop lower. Okay, that's also part of the game. But in my opinion, I think there's a high possibility for both ends. Okay, both ends all the way. It can drop further to the downside. At the same time, it can actually go up. But that is like for next month or 2 months to come. But right now, if you want to pick a trade now, I would suggest not picking a trade right now, especially at this particular demand zone, okay, or support zone, so to speak. So for me, if I'm going to buy silver, I'll wait for it at the bottom here. All right, at that region I said I discussed with you earlier, 74. I would say 70 to 74 region. Okay, that region is where I'll be looking for a buy on silver. Okay, on gold, I think we discussed that as well. I would suggest a buy. I think we've already discussed that a buy around this region at 48.8. I mean 48.50. Okay, a buy around here should be the next call. Excuse me for that. The buy around this region right here. That's where I'll be looking for buy on um gold. Okay, we have a right. We have one, two, three. So we have a triangle here as well. Okay, we have more like a triangle right there, and then right we have A, we have B right here, and then we have C at the top here. Potentially, we could get another leg to the downside back to this region, and then the market will do what? The market will fly higher, higher, higher on gold. So, but in my opinion, okay, gold is more tricky. I think both of them, both silver and gold, are pretty tricky right now because they are currently hovering around this particular demand zone. Okay, gold is currently at 50-20 demand zone, while silver is currently at where? At 80, right here, 80-40. Okay, 80-40 demand zone. Okay, so you can look for buy, but I will not be looking for buy right now. I'll wait for another leg to the downside, then I will look for buy moving forward. So that is our position on gold and silver. And I think should we take a look at Aussie dollar? Aussie dollar on the other hand, I think we discussed Aussie dollar some weeks ago. I'm still looking for buy on Aussie, honestly. But I think we can get a deeper pullback on Aussie. Okay. We can in fact get a much deeper pullbacks on Aussie. And that's another reason why I will be patient with Aussie dollar. Okay, we can wait for a buy at this particular region as analyzed and shared in the Discord server, or maybe another retest of this demand zone right here, and then we look for buy moving forward. Okay, that's my take on Aussie for now. But I'm Aussie, the Aussie dollar, that's what I mean. But again, I'll be careful, I'll be cautious, and we'll see how it goes. Which other pair should I talk about? Pound USD. I didn't take this. Just there for fun. I don't know how to, in fact, call anything on pound dollar. To be honest with you guys, I don't know how I'm gonna call anything significant on Aussie pound dollar, but it's very tricky. Okay, dollar is not at its best momentum at the moment. So I would say that let's take a look at this page. Guys, per pound dollar here. Let's look at the core. All right, so I think I would just have to extend our with C a little lower. Okay, right here we have WXYZ. Okay, WXYZ. So maybe our C is just not over yet. Okay, maybe we're gonna get another C, maybe back to this region. But overall, I wouldn't want this particular region to get broken to the downside. Okay, wave two should not get broken to the downside. All right, we're still more like in a corrective wave of this wave two. So if it breaks to the downside, then we can have to start counting for a motive wave to the downside. Okay, but if it stays above it, then wherever the corrective wave C, okay, wave C of two, whenever it's over, then we start looking for 3 and 4 all the way to the upside. So that is how I'm currently positioned on the weekly. Yeah, so that I'm currently positioned on this particular guy, pound dollar. So let's watch out. Okay, let's watch out very closely, and we should wait patiently for it as well. All right, there is a lot of run on this one. There's a whole lot to play out. Well, let's just watch on pound dollar. So that's that. But right now, I don't see anything worth touching. Copper, I've already spent so much time. So let me just copper again. As a matter of fact, let's come to Edge Finder again on copper and Edge Finder Asset Score. Let's check for copper here. Copper is, I think, is neutral. Neutral. Okay, let's take a look at economic growth. Bullish, 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 bullish. This is just pure dollar. So consumer confidence is also 91.2. That's good. Yeah, I think consumer confidence in the United States is good. That's fair. But inflation is not good at all. Labor data is also not very good at all. At all, at all, at all. COT net positioning. Okay, buy. COT latest buy and sell. I think there are more shorts than long. Okay, they close more of their long and open more shorts. So it's still on average, but overall it's still pretty bullish. So that's fair. What else should we look into? The 4 hour time frame is bearish. Currently, monthly seasonality is bullish. Okay, that's fair. Mm, 20-day moving average is bearish. 50-day period moving average is bearish. These are daily time frames though. 100 day is neutral and 200 period moving average is bullish. So I think that's also something I want us to check on copper. So this is what I'm gonna do on copper really quickly. Let me go to daily basic, right? And then let me unleash my moving averages. See what is happening over there. So on the daily time frame, it has already crossed below 200 period moving average right here. And this is the 100 period moving average. The market is retesting it, using it as support. So that's fair. This is the 200 period moving average right here. So I think if 100 period moving average fail, then we'll be approaching this particular region, okay, on copper. So that is very, very decent, in my opinion. As far as copper is concerned, I think there is a possibility that if this support fail to hold, okay, I'm talking about this particular support right here. If it failed to hold the price and we now eventually get something like this particular move to the downside, okay, I guess we can in fact get a very fast run to the upside after the retest of this 200 period moving average, this particular one right here at $5.3. Okay, 55.30 on copper. Yeah, I'll be looking for buy around there. Also kind of confluence with 200 period moving average. Doesn't look bad. And the top here, it looks like head and shoulder pattern. You know what I mean? This is a shoulder. This is the right shoulder. Okay, right shoulder. This is the left shoulder. Excuse me. This is the left shoulder. This is the right shoulder right here. We have our neckline here. So potentially we can see something like this before the market rally to the upside. Okay, so that's more like it now, copper. If you take a look at this critically on the daily time frame, left shoulder, right shoulder, neckline, right, break, retest, drop back to a 200 period moving average potentially, and then we look for buy from that. It's tricky, it's neat, but we see how it goes. All right, so that's my take for you today. We've covered a lot. We spent so much time together. I hope you enjoyed the session. I'll see you in the next one. Have a